Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 27th of April 2017. So during the course of today's session, we will be covering live market analysis. We'll go through a watch list of trading opportunities. We'll go through a forecast of where we expect gold, silver and also oil to be heading next, answering questions, and as always we'll be providing live support during the session as well. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets are routinely sought by major financial television channels and publications which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal, and of course it's a pleasure to be here on FX Street today as well. For more information on the Gold and Silver Club and our expertise, please do visit www.thegoldandsilverclub.com. Okay, so just before we get into it, there's been a lot of market volatility over the last few days, a lot of lucrative opportunities off the back of the results from the first round of the French elections, which I'll talk you through on the charts very shortly. First of all, if we have a look at the year-to-date performance so far, just get an idea of where the top movers are at the moment. So far, we have certainly the precious metals have performed very well over 2017. We've got gold at the moment, which is up over 9% so far this year. In fact, palladium is currently up over 17%. Silver is up just under 8% so far. It's been a very strong week for the NASDAQ, for also the S&P 500, the Dow Jones. The NASDAQ is currently up just under 14% so far. We've got the Dow Jones, which is currently up 6.4%. The S&P 500, which is up 6.8%. Now, markets which have not fared as well so far this year and we've been breaking down and had weakness have included WTI crude oil, which is down over 12%, cocoa, which is down over 12%, sugar, which broke down significantly this week, which is down over 18% this year, and also natural gas, which is currently down 19%. Okay, so that just gives you a bigger picture view of the markets at the moment. What we'll do, we'll move over to the charts, and first of all, we'll focus on gold here. It's been an interesting few days here for those of you who trade gold. So essentially what we saw off the back of the first round of the French presidential election results, we saw a gap down on the open for gold, quite a significant gap back down to 1,264 US dollars per ounce, as we saw majority of candidates endorsed Emmanuel Macron. He won the first round of the French presidential election. And we've seen really a risk-on mood take hold of the global markets over the course of this week. We've seen equities breaking out to the upside. We've seen the S&P 500, the Dow Jones, the NASDAQ, number of indices breaking out. And we'll have a look at that very shortly as well. And overall, we've seen some weakness in gold this week, which we've capitalized on. And the gap on the open is interesting because often this can be the case, not always, of course, but often on gold in particular. Once it gaps on the market, particularly a gap down like we saw off the Sunday open, often we do expect that gap to fill to a certain degree. And we did see that off the open on Sunday. We gapped down to 1,265 US dollars. It retraced all the way up to 1,277, but it wasn't really able to continue that momentum higher. And in fact, it started to roll over. If we have a look at gold on the weekly chart, you'll see the gap lower, and where this week actually could be the first week going back to March here, where we actually were going to close below the previous week's low potentially here and create a lower low on the weekly as well. So we can see overall gold is rolling over at the moment, starting to break down in price. We saw a retracement into the close yesterday, again off the back of long-awaited news regarding the tax plan, which didn't really inspire investors too much. We saw a bit of a retracement on the S&P 500. We saw a pullback on certainly stocks and also the Dow Jones as well, resulting in essentially a pullback from a major zone of resistance here for the down, also the S&P, which we can just bring out over to the chart at the moment. Now, this is going to be very interesting today to see how this plays out, because we're so close now on the S&P 500 to potentially breaking out now from 2,400 zone. We came very close to it yesterday, didn't quite get up there, saw a little bit of profit taking yesterday, and we're seeing the markets a little bit muted, but we're only really starting to get going at the beginning of the US session now. Now, I would suggest at the moment, gold certainly looks like we could get more downside, although today will be an important day for gold. The level I'm looking at right now for gold is the potential to take out 1,260 US dollars per ounce. That is the line in the sand at the moment. Overall, we've been creating lower highs here. We've been also creating lower lows over the last week since we gapped on the open. We've seen a rollover here since we spiked to the high just under 1,300, which is at 1,295 US dollars per ounce. So we have seen some weakness certainly over the course of this week. We rallied into the close yesterday, didn't see much follow through over the Asia Pacific session. So far today, we've been breaking down. We've seen a bit of a pullback in prices here for gold, and it's hovering around 1,265 US dollars. I'll just show you this because it's a raw chart at the moment. It can just give you a little bit of a cleaner view of what is happening currently for gold. So what I'm looking at, the potential, obviously it could still go either way here. If gold was to manage to break out above yesterday's high here and essentially break and close back above 1,272 US dollars per ounce, it does have the potential to continue this momentum higher, and you could argue that's a potential bull flag formation, and then we're just going to get a continuation pattern here to the upside. However, if the weakness continues, and especially if we can take out 1,260 US dollars per ounce here on gold, that is important zone. It's the level which has been tested 3 times now, that zone, over the last 3 days, and at the moment it's holding. But if it was to break down lower, if we were to see a breach and close below 1,260, I then see the door opening here for gold, taking it down to 1,250, and below that 1,240 within that zone. So I'm waiting for a resolution today to see which way gold is going to go. At the moment it's a bit weak right now. Bears do have control of gold currently. I'm looking at short-term downside here, and then the potential to reverse position again as we go into next week. So there's a lot happening now over the current week. So next Wednesday, we have the FOMC statement. And then on Friday, we have non-farm payrolls. And then the following Sunday, we have the French elections. So we can definitely expect some volatility and opportunities off the back of a lot of news which is coming out next week. Now, I think what we all saw and observed, any of you who were watching or trading off the French election, the first round at the weekend, would have noted the big gaps that we got on the open. Euro certainly gap up of 200 points, big gap down for gold, big gap up for S&P 500. So that was just the first round of the election. So the second round could cause, again, very likely the same sort of volatility and opportunities as well. Those big gaps on the open do create often some really good trading opportunities right off the open. So the French elections on Sunday, the 7th of May, definitely, of course, I'm sure all of you have got that in your diary already, but just be aware that off the actual open, we can see some really lucrative trading opportunities. And that could be a point where, of course, we'll look to potentially reposition ourselves on several trades. So at the moment, the jury's out here on gold as to which way it's going to go. It's been breaking down over the last week or so. It's not too significantly oversold. It is getting a little bit oversold, but it could still break down lower at this point. And right now, we're sort of hovering around the 1265 zone. Silver is looking quite interesting right now. So silver has been breaking down over the last week. It's coming down to a potentially major underlying area of support around the 100-day moving average, and also it's just sitting around $17.40 per ounce at the moment. Now, like gold, silver wasn't really able to follow through. It managed to break above the previous swing high going back to the end of February. Didn't follow through though, didn't really close above that level with any sort of convincing acceleration to the upside. And with that, we've seen a continuation and of a breakdown to the downside here. We've corrected all the way back down to lower end of the trend channel, retesting also the 100-day moving average. Today, again, a little bit of an important day for silver here as well as gold. If we were to break and close below this major level of support around 1740, it opens up the door for a retest of the $17 per ounce zone. Now, the previous swing low there would also need to help for the bulls to maintain their technical advantage. If we did see silver continue to sell off, breaking below the lows here, the previous swing low, that would then start to result in a deeper correction as we continue to progress into May. So again, watching silver and gold very carefully here. With the gold to silver ratio, it does tend to favor strength in gold over silver, or more likely to see more weakness in silver over gold at the moment, which has been the case. But overall, we're seeing weakness in both of those markets, waiting to see whether that will accelerate over the course of the US session today or not. We're going to be watching that closely. Now, the US dollar is nobody at the moment that we're at with the US dollar. It's hovering around the 200-day moving average at the moment, finding support at that level. We're certainly in a short-term oversold condition. We've come into major support here. I'm looking to see whether we will get a bounce of this level, a bounce and a close above near-term resistance here on the US dollar, which sits around 99.25 zone. If we get a break and a close above that level, we could start to lead the recovery short-term bounce back for the US dollar. It's been supported at the moment, so we'll continue to monitor that throughout the US session this afternoon. Gold right now, whilst it's hovering around, it's coming down a little bit at the moment around 1265. So again, I'm looking to see whether we can get a break. If the US dollar picks up momentum to the upside, we should see more pressure on gold as well. You see, gold is toying with the 21-day moving average at the moment as well. So it's been sitting around that level the last 3 days. Again, if we have a definitive breakdown below that, if we break below yesterday's low and can pick up some momentum to the downside, that is where we could start to see certainly a retest of the 1255 zone initially. I'm more in favor of the bears right now than the bulls short term, but I could very quickly change that opinion if we broke out of this overhead trend channel here. So it depends. Whilst we're still maintained below that, whilst we're still breaking down with lower highs and lower lows, I'm looking at more short-term selling pressure, but that could change on a breakout above resistance here. So far, continuing to maintain short-term a bearish view on gold, but we'll continue to monitor that over the US session today as well. Now, moving over to oil. Oil's had a breakdown and it's come back down for retest back towards a 200-day moving average. So we've seen additional follow through to the downside. We took advantage of a breakdown last week of this acceleration to the downside, particularly once we broke through support around the 53.50 zone, took this down to the next level of key support. Now, right now, I would suggest oil also, it's at a bit of a decision point here as well. Looking at this, of course, trend channels can always be a little bit subjective, but it is noteworthy how well we are holding onto one of these channels in particular. I'll just bring it out for you. Okay, so this channel here, which marries up the lows going back to April, the lows going back to also August, the lows, and these lows tend to be lows as well, where the price just stays below the 200-day moving average for a very short period of time before retracing and managing to find support again. The lows going back to November, also the recent lows in March, and we're creating lower highs, but potentially higher lows here as well. So I just latch again that trend channel on just to show you where it marries up to the price, and we're more or less sitting at that level at the moment, around the 51.20 zone, where oil, this is Brent crude oil, is getting supported, or certainly this key level at the moment. It has come back down for a break below the 200-day moving average, but on much tighter time frames, it's getting a bit of a bounce off this layer of support. I would be careful shorting or selling into this oil move at the moment for any fresh positions now. Certainly if you shorted at the upper end here of resistance, taking advantage of this breakdown in price, you've done very well off oil, taking it back down to major support. But at the moment, you've got all of this chop right now on the chart. So new fresh positions, I would be careful because of all this underlying support where we've previously seen breaks down, short-term breaks of support there only to retrace higher. And you've got quite a lot of underlying support with these trend channels as well. So yeah, I'm monitoring the price structure of oil today very carefully around this zone, especially if we can retrace, if we can get another bounce off this layer. So underlying level of support close back above the 200-day moving average. I would suggest we could then potentially be in for another rotation higher here, just continue to consolidate and get within a tighter range. Now, again, we've got the OPEC meeting, which is coming up in May, as well, which is going to be Friday, the 26th of May in Vienna, Austria, which always can be a big mover for oil prices. So looking forward to that as a trading opportunity. And at the moment, I'm watching oil carefully here to see the short term, the last 3 days worth of consolidation has broken down. It's broken down. It's been good for approximately about 70 to 80 points in this breakdown. But I would suggest we're getting oversold at the moment. We're at a key area. Of course, if we break and close below this trend channel, we've got opens up the door for lower prices on oil here, but so far we're getting a bit of a bounce off this level. I would be monitoring that and be careful on the short side, looking to take profits around this zone because of the potential for a retracement and a short-term bounce higher here. So that's what I'm looking out for. Brent crude oil at the moment, it's a similar situation with US oil as well. So both of them are very similar in terms of these price structures. And again, if you go over and have a look at US oil here, you'll see this quite clearly on the chart. These weekly channels have been very supportive. The price has moved and ricocheted between these levels very well. Sometimes you can overshoot. So you've got two trend channels there. You can overshoot this supportive layer, break down slightly lower, and then form a rejection candle into the close around this zone. But now what is noteworthy is we're getting lower highs and also higher lows as well. So I'm watching this zone for any potential retracements and movements in price back up again. So yeah, we'll just keep an eye on that zone again on just really very much tighter time frames. I'll just show you that with, let's have a look, UK oil. In fact, I just need to change that. Yeah, we're getting just a little bit of rejection at the lower end of this trend channel. We'll see. There's still quite a lot of time to go during the US session over the course of today. We'll see what occurs on oil. But essentially, right now, watching gold for some short-term momentum lower, keeping a very close eye on that. The S&P 500 will be interesting today because we got so close yesterday to potential breakout of the highs. We developed that rejection candle of support, excuse me, of resistance. And you can see very clearly here, in fact, where we're now really range bound. I've had a few questions on the S&P as to whether it's overbought at the moment, if it's a good time to short it. And I would suggest we've been correcting now on the S&P 500 since the end of February, beginning of March. So we corrected for over a month. So it has really resolved itself out of this oversold condition. So even though we're near the highs at the moment, we're near the all-time highs, I would suggest it still could have more upside. Certainly, if we break out and close above 2,400, that could really see, obviously, the price ramp up considerably of a breakout above that level. And all we've really done here on the S&P recently is come back down to support, and we've ricocheted off that twice, and we're just consolidating between support and resistance. The more tests of overhead resistance here, the more likely it is to give way. The S&P 500 so far has done well, not really to break down much at all after yesterday's sell-off towards the close here. The long-awaited tax plan failed to inspire investors, and we did see a little bit of a pullback into the close, although today the overall sentiment has been quite strong. Some earnings which have come out earlier on in the US session have been strong as well, which are providing some support here at the moment to the S&P. So I'm watching this market very carefully to see whether we can break above the all-time highs here and get some follow through at this level of resistance. So yeah, keeping a very close eye on the S&P, and here just a more detailed chart at the moment where we gapped up on the open. So we talked about this last week where the S&P 500 had been building up quite a strong base. It created another higher low here, continued to consolidate. Support was at major underlying support was at the 2,220 zone, held on to that level, and rather than enjoying normal trading hours, breaking, closing above the 50-day moving average, it did it in style off the open from the Sunday open after the first round of the French elections. It gapped up on the open, didn't fill the gap incidentally, not so far anyway, and has continued to rally and get very close to breaking out from the all-time highs. Of course, the Nasdaq has broken out here to all-time highs. The Dow Jones at the moment is still had quite a strong move over the course of this week. So we're watching the equities here very carefully as well. Now, again, going back to gold, I would keep a close eye on this because I do see this as having the potential for a breakdown today if we can take out support here at 1,260 US dollars per ounce. That's the key level I'm looking at the moment for gold. If we breach that level, take it out, we could start to see this correction build up momentum. It's not looking too strong now at the moment for gold. Is certainly if we close the session near the daily lows here, it leaves this breakdown from 1260 quite vulnerable to follow through here. And I'll just break it down onto, let's have a look at a tighter time frame for you. Can see the 1 hour is just starting to sell off here. There is a lot of underlying support at the 1261 to 1262 zone. That's the level that gold needs to take out in order to sell off at the moment and have the next move lower. And again, a break and close above the 1270 zone would likely cause a breakout and a follow through. So if gold does break below 1260, closes below it, then it opens up the door for a sell-off back towards 1250. That's what I'm looking out for at the moment on gold. Also, platinum is worth a look too. So if we move over to platinum, platinum has been breaking down over the last week. It's quite range bound as well, so it's stuck within a range of 990 US dollars per ounce down to 930. We're still moving between that range. Possibly soon we'll get to an area where platinum will be good value again. This is the level it broke out from at the beginning of January. Had quite a successful move all the way up to 1,044 US dollars per ounce. It's corrected now almost 1,000 points, and I would look at the 930 zone as the next level that we could get a bit of a bounce, potential trade opportunity off that level. So if we get a retracement back to 930, I would have alerts set up at that level. Just look at the price action around that zone, particularly if we see just a bit more of a further correction for the precious metals. But then once the correction is over, we could start to see this bounce higher. We could also start to see traders get a little bit nervous next week as we get closer and closer to the French election. There still will be uncertainty around that. Of course, Emmanuel Macron is currently ahead in all of the polls, but we all know what happened on Brexit, and we all know what happened on the US election, and the polls don't mean everything, and therefore we could start to see some risk as we go into next week, and maybe a flight back to safety towards the end of next week. But before that, we've got next Wednesday the FOMC statement, next Friday we've got non-farm payrolls, and then on the Sunday we've got the French election. So lots going on, lots to trade. Volatility is a trader's best friend, so we're looking forward to all these news items as we go into next week. And guys, if you enjoyed today's analysis, if you'd like to get more of this, if you'd like to join our live trading rooms during the week, find out the exact trades that we take at the Gold and Silver Club, entry, exit, take profit, get notified on every position, get access to our private members academy, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and of course someone at the Gold and Silver Club will be getting in touch with you ASAP. So again, to get exclusive access to our private members live trading room, all you need to do is go to www.jointhegoldensilverclub.com. Very much look forward to working with those of you who will be making an application and joining us at the Gold and Silver Club. And again, as a member, you get access to our live trading room webinars during the week. You get access to our live trade setups ready to implement. You get real-time notifications via email and SMS. So you're not going to miss out on profitable trades. Details of where we enter, exit, take profit on each trade, a weekly trading plan with a watch list for the week ahead, trade support to help you through each trade, and institutional level trading research and commodity insights to give you the edge in the markets. Okay, so again, all you need to do is go to www.jointhegoldensilverclub.com. Okay, fantastic. So with that, guys, good trading, good luck out there. Have a fantastic day. We'll certainly catch you on the next one. I look forward to hear from those of you who will be joining us at the Gold and Silver Club. Okay, take care, guys. Thanks very much. Thanks to FX Street and the team for hosting today's session. Thanks, everybody. Bye-bye.